This conference will now be recorded.
Okay, next topic is actual costing. So in the last session, we did predictive analysis, right? Okay, next topic is actual costing. So before going for actual costing, you need to understand the business process of actual costing. So actual costing and material ledger, there are two separate components in fact. But material ledger is mandatory if you want to use actual costing. But you can also use material ledger without actual costing. And actual costing calculates an actual price, are also called periodic unit price for each material. The actual price includes all actual cost for a particular period. The actual costing uses actual cost to evaluate inventory of raw materials, semi-finished products, finished products, etc. So now let's try to understand the business process of actual costing. Actual costing is also called actual cost is also called PUP or periodic unit price. What is periodic unit price? Okay, first let us see like this. What is the process we are going to uh, adopt to understand this topic? Let's divide this into different parts. For example, we'll try to understand business process first. Then we'll try to understand business process. Then we'll do all the necessary configuration. Then we maintain all the necessary master data. And then the end user part. Let's try to see the first part, the business process. How actual costing is done. Okay, so first you need to understand what is periodic unit price. And one thing before that, you need to understand that you can do even actual costing for raw materials also. Okay, so we already created standard cost estimates, and when we calculate periodic unit price, that is actual price, and the variance is used in different places. Okay, now let's try to understand business process like this. For example, if I have actual cost or PUP, whatever it is, for FG and SFG, how it is calculated. SFG and FG, these are manufactured in-house, for example. If they are manufactured in-house, so how actual cost is calculated? It is average cost of all production orders in a period or in a month. For example, if I have 10 production orders, into the cost of, okay, like this, total cost of all production orders. That means for each production order, costs are recorded. And what is the total cost of all production orders? And total goods receipt quantity from all production orders. And then third one is and production variance. For all production orders. Okay, this is simple. If I say total cost, total goods is, there may be all the production orders are not executed completely. In that case, work in process is also taken into account. Okay, let's, for simplicity's sake, we'll omit the work in process. We are going to see it practically work in process. If you have 10 production orders, what is the total cost that incurred for all production orders? What is the total goods received quantity from all production orders? And production variance for all production orders. All these things are taken into account to calculate periodic unit price of a product. This is for, now you can easily calculate, like use this formula. Total cost plus, yeah, this is at the time of production order confirmation, all the costs are recorded here. And finally, production variance is calculated as part of month-end activities of production orders. And this plus this divided by this, you will get the average cost of all production orders. Okay, this is how actual costing is done for SFG and FG. Okay, now PUP is equal to this divided by total goods received from all production orders. Just imagine if all the production orders are executed completely within a period. This is if production order is pending or not done completely at month end, work in process is calculated, and work in process is also taken into account here. Now, okay, if I say total cost, yeah, just imagine like it is total cost after taken work in process into account. Okay, now whatever it is, this is how PUP is calculated for SFGs or FGs which are manufactured in-house. Now, what about raw materials? Raw materials, here I am talking about raw materials. That means just read purchase order here in a period. Total, if 10 purchase orders are there, and total cost of all purchase orders, cost means here, okay, whatever is the goods receipt price. So for example, it's a total goods receipt. Total goods receipt of all purchase orders and invoice variance. If invoice price is different, that is also taken into account. Invoice price difference. Let's not call. Yeah, excuse me. Invoice price difference for all purchase orders and total goods receipt quantity from all purchase orders. Okay, why I'm changing the method FG, SFG, they are manufactured in-house here. So I'm using production orders. Raw materials are procured from external vendors. So I'm using purchase orders, production orders and purchase orders. That's the difference. If 10 purchase orders are there, what is the total goods received from purchase orders? If any price difference arises, that also, yeah, use this formula. So PUP is equal to total goods received from all purchase orders, invoice price difference for all purchase orders, and divided by total goods received quantity from purchase orders. Okay, this is initial goods receipt. This is at the time of invoice price difference. If any price difference arises, it is also recorded. It is also taken into account. And quantity, total goods received quantity from all purchase orders. So here I am talking about in a month. This is very important. Here also, okay, this is simple process. This is simply how actual cost is calculated roughly. Now, okay, from where all these costs are taken. For example, if it is we are talking about SFG or FG, production order costs are recorded during confirmation process. Okay, for example, if you are talking about this total goods received quantity from all production orders, where it is recorded, goods received quantities are recorded. Okay, so Yeah, here I'll put it here. I'll put it separately for SFG. Okay, actual goods receipt for FG and SFG is recorded at the time of production order confirmation. Throughout the month, when you do production order confirmation, actual goods receipt quantities is confirmed, are recorded. Same way, costs are also recorded. Okay, actual at the time of, okay, I'll put it like this. Okay, at the time of production order confirmation, one, actual goods receipt for SFG is recorded, and two, component raw material consumption is recorded. And three, raw materials means any components, not just raw materials. Okay, let's use specific term components. For example, SFGs are components of FG. If SFG consumption is there, so one way SFGs are raw materials of FG, you can consider like that. Whatever it is, component consumption, FG consumption or raw material consumption, whatever it is recorded during production order confirmation. So this is where actual quantities are recorded, in fact, production order confirmation. And what next? Any activity consumption. Activity quantity, like man hours, machine hours, okay, processing hours, whatever, activity quantity recorded. Activity quantities, yeah.
Component consumptions are recorded even at the time of work in progress, right? Not only confirmation. Initially also they can record,
Please
right?
come again. Please come again.
The component consumption.
Okay.
It can be done in the initial stage also, right? Not only at the time of confirmation.
No, where it is recorded?
In the production order, because once you start it and if it is a work in progress, they will be issuing the material as well, right? Components as well for it.
No, where it is recorded technically. You do it something. Okay. You can also issue raw material to cost center, for example, but generally we don't do that. We issue consumables sometimes to cost center.
Yes.
Yeah.
Only at the time of goods issue it is recorded.
Now what happens when if it is issued to cost center, it will become part of activity. If activity is produced in a cost center, so all the costs of that cost center will be taken into account to calculate the activity price. That means, so it will become part of activity only.
Even if we are issuing to production order,
you are issuing to production order means, it is recorded during confirmation only.
Okay.
That is technically recorded during production order confirmation.
Okay.
Yeah, I told you, like, production order confirmation is where actual quantities are recorded.
Okay.
And all the costs of production cost center, they will be using all the costs of production or cost center, activities, quantity, activity type is produced. And activity type allocation is also recorded during production order confirmation. Okay. Next, and other things like, based on this, goods receipt, this is what is required, right? And so based on this, actual goods receipts, actual consumptions. So initial costs are calculated. Okay, so then production variance for all production orders is calculated here. So this is a month-end activity of production order. Okay, and in fact there are different stages in product in actual costing. Like first you calculate, if you create a production order, you can create a preliminary cost estimate also. But that one I separated it. It is into two separate topics. Like for example, we have product costing by order. That means production order costing. We do production order costing separately and actual costing separately. That's why it will become too complicated. I'm just trying to simplify at this point of time. In the topic product costing by order, we are going to discuss the production variance also in detail. Okay. So at this point of time, just imagine like production variance is the difference between standard price and final costs that are recorded for a production order. Okay. Now activity quantity is recorded, and based on this, actual cost is calculated. Okay. For example, it also takes into account the actual cost of lower level object. For example, if raw material price changes, SFG price changes. If SFG price changes, FG price also changes. In the components consumption, so it uses at the time of confirmation, it uses price at that particular point of time. But at the time of actual costing, cost roll up happens. So all the costs are calculated all the way from raw materials to SFGs. Okay, we are going to see that practically. Now simply, I'm trying to simplify the process. PUP is, you can say average procurement cost of the period. If it is raw materials, it is average purchase order cost. If it is SFG or FG, it is average production cost of cost of products in a period. How it is calculated? It is calculated simply using this formula. Now, what I am trying to say at this point of time is production orders are the basis for calculating actual cost of FG and SFG. Purchase orders are the basis of calculating actual cost of raw materials. So you may have multiple purchase orders from different vendors. Each purchase order price may be different. So by taking into account all the purchase order prices, and if any at the time of invoice price difference is there, it is also taken into account. And so average price, periodic unit of price of raw materials is calculated in that way. Okay. So these actual quantities are recorded at the time of production order confirmation. Here directly we receive goods receipt and invoices. FI related things, and also the CBO related, whatever is related with this actual costing, they're also going to be configured here. And master data, already we maintain BOM routing, and we may have to maintain another BOM or routing for actual costing. You can create master data like that. Then in the end user part, okay, you are going to do different things like PP end user. In the PP end user part, we do production order confirmation. And this happens during the month. And we are going to do these things practically. I'm just trying to give you a theoretical overview. Okay, and we do various month-end activities in PP, like production order,
Settlement.
settlement is done last part of, and before that you can calculate variance.
WP.
Yeah, variance,
Production
WIP.
order is confirmed by FI end user.
No,
Then
PP end user. I said PP end user here.
okay, fine.
Okay, variance, work in process calculation, and even before that, overhead calculation, and even before that, okay, there is something called revaluation. Okay, these are done production order closing, that is at month end. And before this closing process, cost center closing. Like allocations, all of them. Allocations, settlements, activity price calculation, etc. PP end user, this is in cost center closing, and then production order closing. In the cost center closing, first we close FI, whatever like primary postings or depreciation is there. We close that one, we finalize that one, then we start doing settlements and allocations in cost center accounting. Finally, we do price calculation, activity price calculation, and then we do production order closing, like revaluation, overhead calculation, work in process, variance, and settlement. So during settlement, variance is settled to FI and also to COPA. That's a different issue. Yeah, now I separated these activities: overhead, revaluation, overhead, work in process, etc. And we just see variance settlement in this topic. Revaluation, overhead, work in process, all these things, apart from all the everything right from here, including work in process and overhead, etc. We are going to do in the topic broadcasting by order separately. Okay. Now anyway, now after doing activity price calculation in cost center accounting, we have to do production order closing activities. Yeah, now after the settlement, then CO end user. Actual costing process. This is called costing run, CKM LCP. This is the process. Okay. Yeah, do you remember somewhere I explained about closing sequence across components? Like right from FI, cost center accounting, internal orders, then PP, then actual costing, then COPA, something like this. You just recall that. The sequence, end user sequence, is nothing but that one. Okay, if I put it in a different table, it looks like this. F5. That means we are going to do all these things together here. Internal orders, cost centers, and we have PP, we have CO again, like so. FI closing, like what is say primary posting and depreciation posting. So you have to finalize all these things. After this, you close FI and you lock CON. Then you do settlements like internal order to cost centers. Yeah, it depends on the relationship between your controlling objects. Settlements, allocations, and after this you do activity price calculation. Yeah, it is from left to right and top to bottom. This is a closing sequence. So after primary posting and depreciation posting, you do settlements and allocations. Finally, if you're ready, all the settlements and allocations are done completely, then you do activity price calculation. Okay, and yeah, if you, so this is for example, this is closing sequence. This is during month. During the period or during the month. This is closing sequence. Okay, so this happens here, or you can close FI. That means you can finalize. You can say one way, you can say that primary posting or okay, depreciation can be month end. It can be run at month end. So primary posting to cost centers, internal orders, everything is posted during the month, and you finalize that, and depreciation is calculated as part of month end closing in FI, and after that settlements and allocations, etc. Okay, even before that you can add one more here. So beginning of the fiscal year, yeah, you can do cost center planning, internal order planning, activity planning. In the beginning of fiscal year or in the beginning of the month, because we use planning data throughout the month. So we need them from the beginning of the month. So you can do it in the beginning of period. Generally, we do planning for the whole year in the beginning of the, because this information is required in for using activity price calculation. Okay, then plan activity price calculation. Okay, so during month, if any allocation happens, okay, so if during month, if any activity allocation happens, it uses plan price. That is the reason plan price should be available from the beginning of the period. So generally, we can do that from the beginning of fiscal year, and we do all these activities in the beginning of fiscal year. The information, this data will be available for all whole year, for all the periods. Okay, so during the month, primary posting happens in here, and in here, of course, primary posting is recorded here. Next in PP also, yeah, here during beginning of the fiscal year, you can create BOM routing. If required, you can change it anytime. Okay, yeah, during the month here, production order confirmation is done here. Production order confirmation. Now, after doing activity price calculation, we'll do all these activities. Production order closing, like revaluation, settlement. Yeah, this is important. After this step, we do revaluation. Revaluation of production order, activity consumption at production order level. If any activity is allocated, it is validated with plan price. You know that during the month. After calculating activity price calculation, you do revaluation. That means if any activity price difference arises, it will be allocated to production order again. After this, we'll do overhead calculation, work in process, variance, settlement, etc. After this process, we are going to do actual costing process. This is CO, right? So this is related, yeah, with this. This is the sequence. Okay, and yeah. So this is actual costing process and user part here. Yeah, you need to understand the relationships here between components, between modules,
Srini,
etc. Yeah.
in beginning of the fiscal year, you have given production order confirmation.
Yeah, sorry, it should be, yeah, it should be here during the month.
Okay.
Yes, you're right. Yeah. This happens during the month. At month end, after calculating activity price calculation, we close the PP module. After that, we do actual costing process. Okay, so we'll stop here today, and tomorrow we start configuration. And we are going to do all these activities practically, and we are going to see the output. And finally, we are going to do actual costing, and we see the PUP and whatever. Okay. Yeah. Yeah. This actual costing itself is very complicated. We are going to see what happens during actual costing process practically. Okay. Yeah. See you tomorrow. Bye. Thank you.